It's Sunday, the 15th of September 2019. It's been 4 or 5 weeks since the last video I put up. I think that was on the 11th of August. One of the reasons I do this channel is not just to share a bit of experience and knowledge of the gold sector, but also to reinforce my own trading and try and make rational decisions and have that thought process, so I can go back and look at what I've said in the videos as sort of as it occurs to me. And in the last video, I was actually urging a lot of caution in the ASX gold stocks. There'd been huge run-ups in a lot of the stocks, up 50 or 100% in a few weeks, and that seemed overdone to me. And if you remember, the only stocks I was really in were these sort of developers. And the three first stocks in that video were WAF, Cardinal, and Echo Resources, and all have probably been some of the best performers in the sector in the last 4 or 5 weeks. And while the mid caps and larger cap stocks have gone down 20% plus, in some cases almost 40%. So that's been a good trade, and I've been quite happy with that in the last few weeks. So I'll talk about the individual stocks. I'll try to run through these fairly quickly here. West African Resources, pulled back slightly from its highs in the last couple of weeks, but then had a nice resurgence last week, and now into clear air and up at 5-year highs. Um, the company's completely different from when that last high occurred in 2011. So in reality, it's almost an all-time high type run. We've seen really nice volumes come into the stock. Textbook charting stuff here. It's as the production becomes closer, it looks like there's seeing some institutional investors come into the stock, seeing volumes move with price, which is perfect, up at 52-week high volumes, or 5-year high volumes, as price is also at 5-year highs. So that's perfect charting action, and I think we're going to see that institutional money move into this stock, trying to find value. The metrics of this project are extremely good, and that's why I've been talking about it for the last 2 years on this channel. But it looks like now the risk is gradually diminishing, and the stock is set to run higher. So I continue to hold, and I think this has got considerably more headroom to run. That whether we ever get to that all-time high, I think that 67 cents is extremely achievable in the next few months. But I think we're going to see that institutional flow come into the stock now, which is really where the easy money, and you get these big moves up. And you can see there when we had that pullback, one of the telltale signs on a chart when you have these pullbacks, that relative strength to the rest of the gold sector is one thing I look at. So if WAF's trading at all-time high like at all the other stocks, and it's only come down 5% when everything else has moved down sort of 20%, that's a good relative strength indicator. And something that I use frequently. And also the volumes, you can see that pullback there, no volume. They're looking for some supply further down, and it's just not there. And then you've seen some big cross trades the last couple of days. I think Friday, this is only ASX data. There's also GIAX as well, and I think there was the volume combined was 22 million. So you could see a substantial holder come onto the register pretty soon. Given the assuming this volume's going to a single buyer. So I'm really happy with how WAF's performing, and I think there's plenty of room to run still. Cardinal has also done fairly well. It's sort of treading water a little bit here. There's a few stock-specific factors here. So the last video, 11th of August, just after it had broken out this downtrend, and it's surged rapidly in the next couple of days after that and settle above this previous sort of support resistance zone around 47 cents. So I'm relatively happy there. I think their feasibility study is due in the next few weeks, so that's holding the stock back. There's also options conversion happening by the end of September. So a few people selling the stock perhaps to fund their option conversion, but that process should be winding up, and I think that's been a bit of a millstone around their neck for probably the last 6 months really. But I think the project should speak for itself in that feasibility study. So I'm hopeful that there's no nasty surprises in there, and then the stock can get a bit of clear air after that. Echo obviously had a takeover offer in the week after I put up the last video. So offer at 33 cents from Northern Star. I think
just shows you that all the planning you do, the obvious scenario sometimes does play out and often does. Like the Northern Star were a 20% shareholder. They had always looked like they were going to take out Echo, and they didn't necessarily take it out at the lows. I think there's a tendency, particularly for sort of newer investors, to think when a stock is cheap is when they get taken out, but that's not generally how it works. And I mean, when I say cheap, I mean relative. When they're at these lows, they were. Why didn't Northern Star take it out here? Well, the sector wasn't really moving there. Northern Star's share price has obviously had a big move. Big companies tend to get more aggressive when the gold price is moving, and everything's in their favor, so they don't mind paying a little bit more. And obviously probably Echo wouldn't have sold at those prices as well. So I still hold. I'm not sort of. I think 33 cents is a fair offer. If you look at the last video, I said north of 30 cents was probably fair value, and that's where the offer's been pitched. So I've been fairly happy with that. I'm not going to hold out for another 5 cents, and I'll be accepting the offer. I think there are, the experience in the last few years has been that a lot of these companies struggle when they go into production. So I'm sort of happy to take the money and move to other opportunities. But I can see an offer. That offer looks like it might struggle to get over the line with a few larger holders looking like they'll hold out. Regis I had as a one that I was avoiding in the last video when they were trading up about $6. They've come down nicely toward this longer term trend. I bought successfully here a couple of times, so I have taken a small position. Still a quality company for mine. You can see there's a little bit of support coming in. It's probably still a weak chart. I might be a bit early there. But if it goes any lower, I'll probably look to accumulate a few more shares. I think that obviously their run had been overdone, but you can see they're now trading at the same price they were before the gold price broke out above sort of 1360 at the start of June. Regis is back to that. So the gold price in Australian dollars is about $300 or $400 higher, and the stock price is back where it was then. So I think that sell-off's overdone, and I think they're still a quality producer, still pay a good dividend. 16 cents last financial year. I'd imagine that would be up sort of 18 to 20 cents plus this year, given the gold price move and the profits the company will be pumping out. So they're trading on 4% yield, 4% gross yield, which is pretty decent, even on a ASX wide basis. So I'm happy to own them. Still a few issues around the McPhillamys project, but I don't think that's really in the share price. So I'm happy to trade it. I guess you could see a little bit of benefit if that project has some good news come from it. Saracens, the other one I did buy into in the last week. Got into Saracen at 320, 321, I think the other day. So I'm pretty happy with that entry. Again, sort of return to this little long-term average for the last, or not long-term, medium-term trend line the last year. I might be a little bit early there as well, but I'm hopeful there that that should be a reasonable buying opportunity. At 450, 470, it was ridiculously overvalued, but you can see it's come down 30% since there almost. So I think that's a reasonable entry, and those two are the ones that I was probably happiest to enter and even wait even if the gold price fell a bit more, I thought they'd be well supported. Silver Lake's one I've had as an avoid in the last two videos. First, I think it was in this $1.20 range, and then the last video was just after the last quarterly. You can see there it's trading $1.30, and it's been the most harshly dealt with of any of these sort of ones that have had that big run up. Then the takeover of Egan Street also looks like it's going to struggle. The acceptances there don't seem to be coming in like you would expect for them to get to 90%. So again, it's trending back to these sort of longer term trend lines. And that's why I have these here, because you find stocks tend to come back there when they have these ridiculous runs on the pullback. And that's exactly what I was saying in the last video. Just the pullbacks will happen even in a real gold bull market. At 96 cents, I think Silver Lake's probably potentially getting toward fair value, but not quite there. Maybe it's a very weak looking chart. Ramelius, I think, has performed quite well in the last couple of weeks. Talking about relative strength, it's a fairly ugly looking chart. probably hasn't come back as much as something like Silver Lake. So it's held up reasonably well. Those two stocks tended to trade on a, when the number of shares were about equivalent, which is sort of broken now, that relationship. But Silver Lake and Ramelius, the dollar value of the stock prices tend to move fairly similarly. Sort of similar margin companies, short mine life, same jurisdiction. So it's always been a bit of a pair. Um, so, the Ramelius chart not looking great, but it's probably performed better. It's probably still in the top half of that move. Hasn't really retraced too badly. So it's not probably one of the stronger charts in the mid caps or the small mid cap. So, potentially that's saying it might be one to own still. Dacian's interesting. It's continued to move higher. The last video I think was at about $1.12 from memory. So it was up here last video. So it still moves up pretty well. Interestingly, the GDXJ Junior Gold Miners ETF just announced their rebalance the other day, and Dacian is an addition. It's something I've talked about in a few videos and in Hot Copper a few times. This is a big factor in the particularly. So I think the GDXJ has to buy a quarter of a percent of the fund has to be allocated to DCN, and that fund is about $4 billion US. So a quarter of a percent roughly translates to what's that, 10 million US dollars of Dacian stock has to be bought this Friday coming up. So that's going to be about $15 million Australian, so 12 million shares roughly. So that's going to be a big demand for DCN shares. And this, I think, is probably one of the underlying factors in the strength of DCN relative to some of the others. So, there was a lot of shorts had got in here, and I don't know how many of them got out. I haven't looked at the short man chart recently, but that demand for 12 million shares is pretty significant. Ironically, it's really one of the reasons that DCN struggled to get into the GDXJ was the turnover of stock wasn't high enough. You can see here it used to only trade about that sort of million shares a day, and the threshold to get into the GDXJ is a US $1 million a day of turnover. But since it's had that massive sell-off, the turnover has really picked up massively. So the volume, even at a much lower share price, has tipped it over that turnover. So anyway, I think that's 12 million shares. That's it's going to make a big difference. That's probably about 5% of the shares on issue. So you could see a bit of a gap up on the Monday open, or it's already been priced in. It's sort of hard to know, but the shorts had really overplayed their hand here. And that's why it's not a good idea to short gold stocks in this sort of environment. But anyway, they're happy to do it. So it's been a bit of a widowmaker for a few people. Medusa again held up pretty well. Like I said, I'm looking for the relative strength to some of the other gold stocks, and I rebought some of my Medusa shares the other day at 81 after selling sort of a little bit higher, but I was happy with the pullback. Stock's still pretty undervalued relative to the rest of the sector, so that's one that I've talked about a few times in the videos. Still happily in that position. Perseus has come back pretty harshly, I think, in the last couple of weeks. You can see I don't often use these these Fibonacci retracements. I'm not a true believer in this sort of stuff, but it does give you a bit of an indication of the depth of the pullbacks. In the last video, I talked about Perseus being that leverage sort of gold stock does move higher and then lower, and if the gold price moves lower, Perseus stock tends to move lower, and it has pulled back to that sort of 50%, which is probably a deeper pullback than a lot of the others. But I've been buying a couple of parcels around here as well in this sort of 70, 73. So I think Perseus probably had its pullback, and now not a bad purchase on a US dollar gold price run, just to get exposure. Resolute, again, I've been talking about this one. Last video, 11th of August, it was back up above that $2. And I've been very bearish, cautious the last two videos. So, it's pulled back, what's that, more than 30% now. So I still think it's overvalued here. The amount of problems, and you saw the other day that the CEO sold, I think probably $3 or $4 million worth of shares from memory, a large stake, and that's never a good sign for me. They've got a lot of debt, and they're having ramp up issues, I think. So the CEO selling, not a good sign. So I'd still an avoid, and I'd still rather own Perseus, for example, if you need to own a West African leverage gold producer. Last couple of stocks, Gold Road, I've had as an avoid as well. I thought the last video, I think they were still trading at their all-time high levels, sort of that $1.60 range. Seeing a fairly severe sell-off. Interestingly, that was Goldfields selling their stake a couple of weeks ago in a big block trade, I think. That's probably $100 million worth. So that's going to put a dampener on the share price for quite a while, I think. And I still think there's some risk in commissioning and commercial production startup at Gruyere. So I don't want to own this stock at $1.38. It's not good value for mine, and I don't think they have the don't have much near-term excitement from drilling. I mean, they've got a lot of decent exploration ground, but they could be drilling around there for quite a long time, like they were previously before they found Gruyere. So I think there's more downside than upside for Gold Road, and obviously that's what Goldfields thought as well. Otherwise, they wouldn't be selling their stake. Final one, Northern Star. They've come back pretty steeply actually the last couple of weeks. $14 they were again very overdone, and back down to these sort of longer term trend lines. You could see it. $10 might be a good buying opportunity. Still probably not one for me, even if it did get down to those levels. I think they're not sure where their organic production growth is coming from. They've obviously been doing the takeover of Echo, which might struggle, as I said. Pogo looks okay. They're gradually turning that around, and they might be able to grow reserves there and cut costs a little, but it's still a fairly high cost operation, and some of their other WA operations are reasonably high cost now as well. But they're pumping out good money here. But I don't see them as a value player relative to the rest of the sector. So all in all, that's where I'm putting my money at the moment. I might just finish off looking at the Australian dollar gold price. As I've talked about that a fair while, you can see here it's still trading well above 2100. Like I talked about in the last video, something like let's talk about earlier in this video. Sorry, 11th of June, there's when the gold price really started running hard in US dollars. And you can see some of the stocks like Saracen and Regis have pulled back to the same level as when the gold price in Australian dollar terms was trading at about 1900. So it's $250 higher there. So they're not getting a fair recognition, I think, for that gold price run. And then this fall has been fairly short-lived, and I think the trend is still up there, and you could probably see the currency, Australian dollar's also done reasonably well the last couple of weeks, and I think that's probably starting to end as well. I don't see that being a long term. I think that's sort of a bit of a bear rally for the currency, so I think that should support the Australian dollar gold price around these levels. And I think you just keep riding that wave, which is why I've moved into some of those larger mid caps, because I think there's I want some good exposure there to good well-run companies that pay dividends. There's still a place for those in my portfolio to remove some of the volatility that some of these developers have, and the risks involved there. So all in all, that's where I'm putting my money, and I'll put up another video in a few weeks. Thanks.